Good morning. How are you? It is crazy early this morning. It is like 6:33 approximately, and I have to do it this early because I have a doctor's appointment, so I won't be able to have any activity this morning. I will try and get a trade in later this afternoon, but I can't promise that because it's the day before FOMC and it tends to get a little wonky that afternoon prior. As I just mentioned, there isn't any news today, but there is tomorrow when J-Pow does what J-Pow does, and that is talk about interest rate changes, if we'll have a drop or if it'll remain the same. Yesterday was a very neutral day. We took out both buy stops and sell stops. You can see that in this little purple candle right here. And the market, while overall it continues to have an uptrend, we are now in a second cycle of down. 2 weeks ago, we were here. Last week, we had this little momentary reprieve, and now we're, back down. But always remember, the market goes up to go down and down to go up. So you should expect that. It shouldn't come as a surprise. Let's go down to the 30-minute chart and see where we are in terms of price. And you can see that yesterday's range was 67.74.75 was the high, 67.14.75 was the low, and as of 6:34, we are sitting squarely outside of yesterday's range. So we'll call that piece of context justice. So put justice aside for now. Let's go down to the 1-minute chart and see where we are in terms of value. And you can see that yesterday, in terms of value, where more than 70% of the activity took place, that we are also outside of yesterday's value area. So take that piece and put it on the desk. So now we've got justice, we've got peace. Let's see what those wild hooligans did overnight. Overnight, oh wow, they brought the price down in comparison to yesterday. But as I said, market goes up to go down and down to go up. So we shouldn't be surprised when we see these big variations in terms of what was the perceived value of the session. So yesterday's value, the perception was that it needed to be raised, and overnight they thought it was a little too high, and they've brought it down. So let's take out justice and peace, put them together, and you will see that we are outside. Now let me just give you a forewarning that can certainly change between now and 9:30, especially the fact that we're just this close to the value area. So we might get back inside, but for now, we will treat it like how I see it at this moment, and we're outside. So what does that mean in terms of context? Well, there's always different possibilities because the market isn't stagnant. So let's say the market decides to react responsively. That means it'll probably open up below. Okay, it'll open up below, and if they're responsive, the buyers will try and fade price back up into this region. The first attempt will be to fade it back up to the value area, and then once it gets here, we will see what it does. If it continues to hold hold the range, then we can anticipate that we're going back down. But if it doesn't and it goes back up here, they'll probably go and test price. And then once it gets here, we'll do the same thing again and see if that holds. And if it holds and comes back down, then we'll follow it down. But if not, then, until we get out of this region, we can think that we will be doing two-sided trading. Now, the flip side of that is if it becomes impulsive, that would mean that the sellers are, in charge of the playbook for the day, and we will head down. And there's nothing like just doing what is expected sometimes and just follow the leader down. So those are the two options will either be responsive, head back up, do some checking, and then go from there, or we will be impulsive and we will perhaps have a trend day down. So, like I said, that's likely to change. It's a long way between now and open. So, you have enough time to whip up a homemade loaf of bread, and you could even churn some butter until the market opens. So, I will see you later this afternoon if the market permits, and we will see if we can catch a trade. Until then, keep your head on a swivel, stay safe. Before I left for my doctor's appointment this morning, I said I would come back this afternoon to see if a trade would align. So I'm back. In this recording, you'll see that I found a trade, but it is a forced trade, meaning it had no context, which is another way to say I shouldn't have entered the trade. I didn't have statistical levels marked. My heat map didn't have this morning's historical information on it. It actually picks up at 12 noon. That's how book map works. I didn't have any idea which direction I should be trading in. The only thing I had was one structure, which is delineated in the blue box, and one distribution, which is seen in the SVP column on the right. When I entered the short, I don't even think price had completed a retest on the outer edge of the structure marked, nor had it even looked or touched the developing point of control, which is the yellow slashed or dashed line. The only thing I knew was that I wanted to go short. Can you say FOMO? Anyway, initially, you'll notice that the short was working until it wasn't. Here's a side note though. After I took the L, you best believe price went down. Oh well, that just shows that gamblers have winning hands too. The fact that this is a small account challenge where I'm only using 3 micros or less, that means it doesn't leave much room for taking big losses. And you'll see that when I exited the trade, I wiped out almost 40% of yesterday's gain with that $38.25 loss. That amount exceeds the reasonable daily loss amount. In closing, remember that even if I had the stats, even if I had the historical data from earlier, even if I thought I knew which direction to trade in, and finally, even if there was a distribution slash structure. I didn't have context, and context is clutch. If you don't have context, the best thing for you to do is stay on the sidelines. See you in day 3. Smooches.